Hey, what's up, guys? Houston here. Look, if you have an existing business or a new business and you're trying to get funding, but you have bad credit, I'm going to tell you 7 ways, actually 8 ways that you actually can possibly get the money you need. All right. Now, that being said, please understand a lot of time when trying to get business funding, many people will miscategorize their business, which makes it very hard to get approved for funding and stuff like that. All right. And so what I mean is that they have the wrong NAICS code, but I'll make a more updated video telling you the best NAICS codes for that. But that being said, let's talk about some of these loans that you may be able to get qualified for when you have bad credit. All right. The first one is a ROB, R-O-B, okay? Rollover business. Now, what this means is that you may be working a job, okay? You may have a retirement plan like a 401k plan, all right? So what that means is that you can take out that loan, and I would either pay down all of my personal debt, so that way, using the ROB to pay down my personal debt so my credit score can go back up, and then start applying for business funding when my credit score goes back up, or actually using that money from my 401k to jumpstart your business. Now, here's the thing about it. I would tell you, instead of just starting a business, depending on the business, starting it from scratch, I would actually look at whoever else is in that type of business in my area. So if you're trying to go into landscaping, painting, beauty salon, any type of vendor type of business, real estate, portfolios or something like that, then what I would do, I would go to buybiz.com, right? And I would put in my state. I would put in the type of business I'm looking for, and I would reach out to those people that may be selling those businesses. Now, the reason that I'm telling you this is because if those people are already in business and they're getting ready to go out, more likely their kids don't want the business. So they may be desperate enough to willing to give you a break or a discount on the business. They may even be willing to carry the note, meaning that you agree to a higher price, like they sell in the business, say for $45, you agree to pay them $55 for the business if they're willing to carry the note. That way you don't come out with any money out of pocket, okay? Now, the reason that I'm telling you this by buying a business is because they already have a customer base. You don't have to go out and recreate a new market for these customers, especially when you're starting a business. So this is probably one of the fastest and easiest ways for you to be profitable in your business. So this is something that you should take into consideration. So using the ROB or the money from your 401k to even pay down your personal credit, or using that money to buy an existing business instead of trying to start one from scratch. All right. So that's number 1. Number 2 is peer-to-peer lending. So with peer-to-peer lending, you have like Kiva. Okay. You have platforms like Kiva. You have platforms like Prosper. Those type of platforms and stuff that will loan you money for your business, okay, when you have bad credit. Now, the thing about it, most of the time when you're peer-to-peer lending, they want to see people that are already invested into your business. So you may have family members or something that's willing to give you a few dollars to help you jumpstart the business. Now, one of the things I always tell people, again, when you're going into business, always look for who's the biggest player in my business, all right? And then you will want to check and see if they have an affiliate program. The reason is, if they have an affiliate program, they already have market out there, market dollars out there. People are already familiar with them. So you come along as an affiliate trying to introduce other people to that product and stuff. That money comes in, that helps cover your overhead. That way you're not coming out of pocket. And then that money goes into your current business or your new registered business, now you're able to show that your business is profitable, right? And so that goes into the third one. All right. And so the third one would be like a SBA express loan. Okay. So when you have bad credit and stuff. However, with SBA, if you can show that you have at least 2 years of experience, they use that 2 years of experience as equity. Now, if you're able to produce documents and bank statements to show that the business is profitable, then yes, that gives you more leverage even when you have challenging credit. Okay? So that's the third one. The fourth one is a MCA, Merchant Cash Advance. All right? Now, please understand with Merchant Cash Advance, some of them, they want you to pay it back daily, some weekly, some monthly. At the same time, the overhead for us on the interest may be very expensive. However, some of these lenders, they do not care about the credit score. They're looking at the performance of the business, okay? So that gives you much more leverage when they're just focused on the performance of the business. Now, some examples of that would be like Fundo. Fundo is a merchant cash advance type of company. All you have to do is have revenue coming into the business for at least the past 90 days. All right, minimum $1,500, and have at least 3 to 4 deposits monthly into the business. Now, unfortunately, with Fundo, they do not operate in California as well as New York. Okay. Now, another one for us on the merchant cash advances like Giggle Finance. So with Giggle Finance, again, they offer up to $5,000, same process as Fundo. And then you also have Lendesco that offers up to $20,000, okay? But it has nothing to do with the credit. They're focused on the activity of your business. So you don't have to be making a whole lot of money in order to get a loan for your business when you have bad credit, all right? Now, the next one is like with your accounts receivables type of situation. And so you have like Fair Figure. Okay, so with Fair Figure, with their situation is that they will give you 2 trade lines. Now, this is very important, especially when you're trying to build business credit, okay? Because they give you one for credit monitoring. Then they also give you a financial trade line. So if you're making at least a minimum of $2,500 a month, then they will help you qualify for a personal loan with no hard pull on the credit, no credit check, okay? So Fair Figure is definitely one of those ones that helps build up the credit because they give you that a financial account, which is very helpful when it comes to trying to apply for funding. Then you have other companies that do merchant transactions like PayPal, you have Stripe, you have Square, that you can actually get a loan from them if you have revenue that's coming into the business, where they're just looking at the revenue. They're all looking at the numbers. They're not looking at, hey, what's the personal credit about? Okay, so they're bypassing that. Now, you also have credit cards, okay? Now, you have 2 types of credit cards. You have the secured and the unsecured, okay? So let's go with the unsecured card. The easiest credit card for you to get that's unsecured when you have bad credit is the Capital One Spark Cash, okay? That's the gold card, all right? And so with that, even if you had a bad relationship with Capital One on the personal side and it's over a year old, you still may qualify for the Capital One Spark Business Credit Card, the gold card. Now, Classic, it's the Spark Classic, okay? So for some of you, just to be much more clear. Now, here's the thing about it. The only downside is that business credit card is going to report both on the business side and the personal side. However, when you have bad credit, usually that card usually starts you out at about $3,000 or more, okay? So that's the thing about it. 580 credit score, and somebody giving you a second chance, giving you $3,000 to help start your business. Now, here's the thing about it, where most people won't say or don't understand. Most of the time, it's not hard to raise the money. The hardest thing is to be able to get a customer. Okay, understanding the marketing aspect. That's the reason I was telling you about the affiliate marketing aspect of a company, so that way you can get a feel of the market or buying an existing business. All right, so the Capital One Spark Classic card is the one you want. Then NAV it's a charge card. However, the thing about it, you don't have to put any money up front with the NAV card. Number two is that they don't do a credit check, okay? But number three is most important, is because they're going to give you 2 trade lines, okay? One, they're going to give you a trade line for the credit monitoring. Number two is they're going to give you a financial trade line for the card. Now, I always tell people, and I cannot stress this enough, even if they only give you $500 on that card starting out, please be sure to use that card, okay? Use that card, pay it off before its due date. The reason is this is a financial instrument that's going to be reporting to the business credit bureaus. It's very important, all right? Now, you also have secured cards, which is like Bank of America secured card, right? You have to put $1,000 on it, but it reports. But you're also building a relationship with Bank of America. Then you also have First National Bank of Omaha with their secured card, starts at $2,000. Again, it's building a relationship with them as well. Okay. Now, you also may consider taking out a personal loan that doesn't report to the personal credit. Okay, like low credit finance, because they go up to $50,000, taking that and paying down your revolving credit. Then that way you have a higher chance of getting more high-end credit cards like with Chase and American Express, right? So that's an option for you as well. Now, another one is CDFI. These are your community development financial institutes, okay? So with your CDFIs, they work with minorities in the community that have a hard time trying to get a loan, whether it's a personal loan or business loan, so those may be an option for you as well. Now with those, you have, you have People's Trust loans. Okay, they go up to $10,000. Then you have the Economic Justice.org. They go up to $10,000 as well. But looking at your CDFIs, they have, again, they are more flexible when you have bad credit to help you get approved for a business loan. Now, just keep in mind, again, with their business loan, they're not giving you a whole lot of money when you have bad credit. However, they're giving you more of a structure and that leverage. But I think for most people, the biggest leverage may be to consider taking out a personal loan, paying down your personal debt, and raising your credit score up, and then applying for business credit cards. But make sure those business credit cards are like 0% interest, okay? So that way you can be able to transfer the money from your business credit card over to your bank account and use the money that way to get a jump start on your business, okay? So I hope this video helps you. If you have any questions about business credit funding, personal credit funding, removing negative items off the credit, click the link in the description. Schedule a one-on-one consultation. Thank you.